It's time to bring in Bill Baruch. He's joining us this morning to help us take a look at some of the price activity we've been seeing this week in crude oil and what's behind it in terms of some of the fundamentals. Bill's joining us this morning from Blue Line Futures. Bill, thanks for taking time out of your Wednesday morning to share with us here on the network. I wanted to get your read on the OPEC talks being delayed. What does this mean?
Well, thanks for having me on, Ben. One thing I've been talking about with you over recent weeks and months is that we are bullish. We think crude oil is going higher. The value area was $35, and it did get into there. We moved up through 45, near some big resistance at 46.5. But ultimately, we're settling in nicely. This is very constructive on a technical basis. And we put research out each day, and that research yesterday, we actually went neutral. And the reason we went neutral is the move is overextended a little bit in the near term. But as you said, OPEC delayed a final decision till Thursday. And listen, I don't think that Saudi Arabia is going to come out and say turn on the taps, but it's something that you must be conscious of at this point. We've seen them do it before. We've seen them do it in March, and look what happened. Now, the UAE presented an additional 500,000 barrels yesterday. Russia was backing that. That's how these rifts start, and you really need to manage your risk at these levels. But regardless, the path of least resistance has been higher, it is higher, and there's a nice bull flag developing right at major three-star supporters that we describe in our research, 43.33, 43.83.
Yeah, I like this. The nice move off the spring lows and the breakout this week, definitely in the direction of the trend that we've been seeing to the upside and supportive of the narrative that we've been hearing about in terms of some of the vaccine news, the indices. We just took a look at into new all-time highs. Oftentimes that'll help lift crude as well, as it's all tied into that demand narrative or expectations and optimism. Let's talk about the demand side of things and that narrative. I mean, I guess one's going to get some insight in terms of that today as far as inventories. And I guess I'm wondering how much focus do you think that will get ahead of tomorrow's potential announcement? That sounds like I'm hearing that might even get pushed back as well. But for the most part, I mean, barring some sort of major unforeseen release here today, I mean, I'd imagine for the most part, the focus does remain on OPEC. I mean, one could argue that you have the dollar also weakening as a focal point for traders also.
Yeah, the focus will be OPEC. And last night's API is weighing on crude oil a bit too. Surprise build in crude oil. They were looking for a build in gasoline, but a little better, a little higher than expected. So that's weighing on the market. I mean, analysts were looking for a draw here in crude. So last night's build, it's another reason here. But again, this is OPEC right now. Everybody's waiting for OPEC decision. And you mentioned the dollar. The dollar is certainly weighing on some commodities. We've seen a good move higher in commodities as the dollar broke through some big significant levels. Yesterday, the Chinese yuan was up nicely too. That supports commodities. So you got to watch that dollar and what that does here today. And I wouldn't be surprised to see the dollar bounce back and hit some previous lows and then find some good resistance. And again, that could weigh on things like gold and crude oil here just in the very near term. But overall, I think commodities are heading higher as we look into 2021. I think crude oil could be higher. I think gold, platinum, a lot of these, copper as well, a lot of these should be higher. But don't forget, I mean, California's numbers yesterday, that was something that weighed on sentiment. We start hearing fiscal policy talks again, and they're talking about smaller package or not going to be that $2 trillion price tag. So that also, all of this is sort of really weighing on risk sentiment. And then for crude, if they start seeing state and local lockdowns, that's going to just start reinvigorating that demand destruction narrative. So again, there's a lot of moving parts here, and that's one of the reasons why we went neutral crude after being bullish for the last several weeks.
All right, and that's why we have you on the show to help us work through some of those moving parts. Bill, we appreciate that. Let's move on here, though, because you have your eye on some of the moving parts in terms of gold. We've been talking about potential for some weakness to come. You've been a little bit ahead of this one, to say the least, and you in your newsletter mentioned how you feel like there's no need to jump in right now. I kind of read into it a little bit, but you certainly were saying that in terms of a correction that has taken place and a bottom takes a little while, there's a process involved with establishing one. I guess the question is, are we in that process right now? Should the gold bulls feel comfort in some of the levels that we're bouncing off of right now in the 1700 level, at least as long as we hold above 1800?
Well, I think you need to ask yourself, are you a trader or are you an investor? And as an investor, I think everybody needs some gold in their portfolio. And there's many ways to do that. Sizing the CME contracts are terrific with the 10-ounce micros. You can really stack and build those. I mean, and get a nice position. And if you're an investor, 1800, that's an area to look for the long term. And again, that's with an investment mindset. You're not loading up and trading leverage. If you're trading leverage, there's been some good trading opportunities, and I expect a very nice trader's paradise, if you will. Good, strong resistance now, 1845, 1850. It's going to be very tough to get back through there. That last night's high is 1835, and the sellers came in ahead of that. Also, the dollar strengthened weight on that move, but we're going to consolidate. Today, what I'm looking at, I have a momentum indicator I look at about 1815, 1816 today. We start moving below there, then some of that exhaustion is going to set in. We're more consolidate. 1809, some good support too. So we can stay really constructive out above 1809, 1816 today, and build it for another test to 1845, 1850. But again, this is going to be a trader's paradise. And as you alluded to, I've talked about a bottoming being a process, not a price. And that process is underway. It's played out really great. Options expiration, you got the washout below 1845. Options expiration brought you to 1800. The futures expiration, more of another washout, another cleansing, if you will. And then what we've seen now is all of this market profile is digesting that, and now it's attracting the buyers again for another move. I expect gold to get back above 2,000, maybe even make a run at 2,300 in the first quarter or first half of next year. So I would not sleep on the metals. This is as an investment a place to accumulate, but as a trader, get your trader's cap on. I think this is going to be a good trader's paradise here for the next week or two or three as we get into a more seasonally bullish time of year, December second half of December 23rd area.
I like it. And one of the things that I keep noting in terms of gold, it seems like it does find support when we hear about stimulus measures, and we're hearing of a bipartisan or talks of a bipartisan agreement that's roughly around 900, just over 900 billion, a stimulus package that's being efforted or is being talked about at least. So that, in theory, could support gold prices. An interesting move here. I guess my next question is, the indices to the upside, does that continue to weigh on gold, though? Because in theory, one could argue that some of the bid that we had seen up to that 2100 level was tied to uncertainties related to the election. Those have diminished. There was some, we have the dollar, which continues to weaken here right now, but there were some concerns related to inflation. We're seeing in some areas deflationary pressures right now. I mean, does that continue to weigh on gold, or at the very least hold it at bay?
You're right. I do think we saw a bit of a divergence in gold in the stock market when gold was washing out. And I think ultimately, again, I think it had a lot tied with options expiration, futures expiration, the December contract, and really a final 11 tests at 1845, 1850, finally breaking through. But I do think the stock market has a path of least resistance higher here, especially if you're looking at the S&P. 3623 was that close for Monday, a gap. I wouldn't be surprised to see that hit, but I'm bullish on stocks, and I'm positioning long in portfolios that I'm managing at TD, and as well, I'm looking at futures, just finding a path of least resistance higher. And again, those micros, as I discussed with the gold, those micros give you a really great way to define your exposure for any type of trader. And I think as long as these support levels, the S&P, they hold. But now tied to gold has been a risk asset. I don't think it's going to shift just yet. And I think the fiscal policy that's going to be in the headlines. $2 trillion is not going to be the number anymore, and that we could see a couple of $500 to $900 billion moves, and then you also have the funding bill to keep the government open. So Congress is going to be in the headlines. That could weigh on the stock market. That is a hurdle. In my newsletter this morning, I talked about that being a hurdle right now in Congress. They're in the spotlight, and then for gold, gold wants to see more stimulus, and we need to see something in some progress there. But what I like is we're going to see something on the fiscal front, and I think that's going to reinvigorate gold at the latest in early January. So I do expect the stock market and gold to be higher. But what type of volatility, what type of trading do we see in between now and December 11th when the government must get some sort of spending bill together?
Bill, last question, less than a minute. Where does Bitcoin fit into all of this? It's been a volatile product. It's been attracting a lot of attention. We're hearing of the talk of being at the new gold. Where do you stand on this one?
Listen, I think you need to have some Bitcoin in your portfolio. I think I don't trade Bitcoin on a day-to-day basis. In fact, I don't even know where it is this morning, but I own some of it. So, I think that's kind of how you have to go with it. And we could see, yeah, who knows? We could see 30,000 in Bitcoin next year. We could see higher. And it may just stall out here around 20,000. I don't know, but I think Bitcoin needs to be in a portion of your portfolio, and that's what it's about: is having a diversified portfolio, a little bit of gold, a little bit of Bitcoin, assets that are giving you yield, and then being diversified in stocks. So I think Bitcoin, it fits in there, but again, it's not something I look to trade on a day-to-day basis.